Well, hello once again, Maverick traders. Let's get into our next bullish candlestick pattern. It's Joe with you from Maverick. How you doing? Good to see you. This is the Bullish Marubozu candlestick. Now, what's cool about this is if you guys have been following along with the progression of our candlestick patterns, this candlestick can be used in many, many different forms. But the first thing I want to do is go to Bulkowski. Let's talk about the specific candlestick itself. It is a continuation candlestick. What's great about this is it shows conviction in direction. It shows power in direction. So tested performance, a continuation of the type of candle it is. In this case, it's the Bullish Marubozu, 56% of the time. Now, this was a little bit offsetting, meaning that we would like to see a continuation be more than 56% of the time. 60% would be great. Not so much with this. Now, it did give it a frequency rank of 27 out of 103. These do happen often, but there are variations of the Bullish Marubozu. I will show you them as we move forward. Let's continue with our statistics. Overall performance rank is 71 out of 103. This is not a very consistent candlestick over his 10-day analogy. Keep in mind, folks, Bulkowski loves to find a candlestick and then measure 10 days pass and give it a rank of plus minus how it does. That's how he gauges its performance. Now, the best percentage, meaning its price target, is 79% of the time, where Bulkowski sees this happen over his 100 trades. A bear market in a down breakout. That's very interesting considering this is a bullish candlestick pattern. Well, let's keep going here. Best average move in 10 days is a drop of 4.79%. So after 10 days, after this move to the upside, this Bullish Marubozu candlestick, after the 10 days, the best move that it's had is down 4.79%. So this might be the end of a move, or it could be a little bit of a hiccup or a breath before it rolls over. I'll elaborate on that as we move forward. So bear market, down breakout, down 4.79% is its best average move in 10 days. Doesn't mean that it doesn't go up. It's just the best move. The biggest percentage move is usually to the downside. So best 10-day performance rank is 26 out of 103. And the reason being is because it has an almost 5% move to the downside after the pattern itself. So how can we use this? Well, we're starting to get into, I like to call them the exotics, right? We've got some exotic types of candlestick patterns. The Bullish Marubozu, you can see, is absolutely one candlestick. Now, I put it in a situation to where it came from a bearish move to the downside that kind of confirms a lower pivot low, right? Or excuse me, a lower pivot point. And so I like to see, hey, this pivot happened. We've got a Marubozu that moved to the upside. The confirmation candle is going to break above that high. So the mentality, or I should say, the psychology behind the Marubozu, folks, is it did close and open on an all-time low and high. It's conviction in direction. So take a look at this. There is no wick. It opened on its lowest price, and it closed on its higher price. That tells me that since this candle opened, it did nothing but go straight up all day and closed on its high. That's why it's a continuation pattern. Now, what's tough about this, folks, is where it falls can give us different types of probabilities on continuation to the upside. This is a continuation candle, but more of a target to the upside, or if it's a correction action, maybe it's a short-term correction. If we are in a downtrend, we get a Marubozu candle with confirmation, it could just be a little bit of a bear rally before, based on where this came from, before it turns right over and falls apart. Now, what Bulkowski, I believe, measured at that 4%, over 4% of a move to the downside, might have been in this downtrending situation with a short bear rally that comes up and hits resistance and falls over. That's probably why he gets the, I think it was 4.79%. It was pretty high, that it will roll over and fall apart the majority of the time. If this candlestick is in a sideways trend or in an uptrend or in a breakout situation, it could give us a much different read. Now, folks, how I like to take a look at the Marubozu candle. So the Marubozu candle is a single candlestick. It is just basically a candle that opened at the bottom and closed to the top. It shows conviction and direction. There are variations. I'm going to go ahead and give a tail to this candlestick. If I gave a tail to this candlestick, this is a bullish Marubozu on close. And what I mean by on close is it closed at its high, which could, depending on the pattern, give it more conviction in the continuation of the direction based on where it's at in the overall trend. The other one I'm going to give you is called, yep, you guessed it, a Marabozu on open, which means it didn't close quite on its high. It's going to have a shadow here, but no shadow there. So this is referred to as a Marabozu on open. Gives us a couple of different things to think about. So then when we take a look at the setup conditions, we would prefer this to be uptrending. I would prefer this to agree with the momentum surge to the upside. This is a bullish Marubozu. Whether it's a bullish on the close or open, it is a candlestick that is closed primarily towards the upper side. So, as a reversal pattern or a breakout would be great in an overall bullish trend. The confirmation is above a Marubozu high. So it's very difficult because we need to see one more candlestick above the high of that Marabozu, which happens to be its close. Higher level of frequency. Now, according to Bulkowski, these happen quite often. Now, if you're looking for the pure Marabozu, folks, the one that has no high, no low, open on the low, close on the high, I did not find them as frequently as I did, say, a Marabozu on open, a Marabozu on close, like I showed you guys earlier. So that's where I could see, yes, the higher level of frequency. Low price performance, meaning in the direction of the bull side, it usually is short-lived but aggressive. So over the 10-day Bulkowski standard, most of the time this finishes lower, substantially, almost 5%, 4.7879, right? So let's go out and take a look at a couple of examples. I don't have the full Marubozu. I have Marabozu on open, Marabozu on close, but there are a couple things that we need to take a look at because where it opens, where it closes, and what kind of trend it's in is going to be a pretty big deal. So right out of the gate, folks, I decided to go with something uptrending. And the reason why I've done this is because I truly believe that a bullish candlestick should be in a bullish situation. Uptrending, up move. You guys can see that I've got some higher lows here in this trade. I'm going to zoom in a little bit. Let me get my pen and I'll show you what I'm looking at. I've got a pivot point at this area, a pivot here, higher pivot lows. I've got higher pivot highs going on. So I've got a little bit of an up channel. Now, if I'm looking for a bullish Marubozu pattern, I want to put my best foot forward, get rid of what Bulkowski saw on that 56% of the time it goes higher, but most of the time after 10 days it moves lower. I want to see if I can skew those probabilities and put them in my favor. So let's go ahead and move forward and we'll take a look if I can find this trade. Okay, so you guys can see that we are moving higher here. A little bit of a pullback. And there we have a Marubozu on close. What I like about this candlestick is we are looking for a continuation in a bullish surge. Now, when it comes to the Marubozu candle itself, it'd be nice to have no tail, right? We do have a tail, but what's more important is where the candlestick finishes. And in this situation, the candlestick finished at its high. Give it its 10 days from the Marubozu on close. This is a Marubozu on close, and see where we end up. Okay, so you guys can see there was a quick correction that came down and hit support, and we really ended up going nowhere. In fact, if we were to have purchased this on that Marubozu day, we'd probably be slightly down for the duration. So this is the entry point right through here. It didn't quite confirm because we never did close above that high. But taking into consideration the 10 days passed, we actually ended up a little bit lower than where the Marabozu went. So confirmation is a big part of this candlestick. So this one didn't quite work out because it never did confirm. Let's go take a look at another example. All right, folks, in this next example, I decided to continue with the uptrending scheme, the bullish movement in the overall chart. And you guys can see that we do have that in this. Let me see if I can't shrink it down a little bit to give you an overall idea of what I'm seeing in this chart, which is higher highs, higher lows, slightly, but it is definitely moving to the upside over the shorter term. Sorry, folks, let me draw this line correctly. Jeez Louise. Okay, right through here. So I've got this channel, and I'm expecting this thing to continue up. And of course, as you guys might expect, I did find us a Marubozu candle. Now this one's going to be more specific to a Marubozu on open. So here we have it. Now this is definitely in a different situation. Now there's a couple of things that we could talk about here because I see two of them. And depending on when you got to this chart or what you see in it, might have a lot to do with it, the charts themselves. So I do have that also into this. Now, we technically have a Marubozu here because there is no low. This is a Marubozu on open, but it looks a lot like a shooting star. A shooting star could be a reversal signal to the up or to the downside. Now, obviously, we did break above that. This candlestick isn't big, but it's not quite a Marubozu. But take a look at this one. This is a Marubozu on open after a move to the upside. So confirmation of this is going to be a little higher. Now, keep in mind that this is a continuation candlestick pattern. This chart, to me, already feels like it's extended itself well above that outside line. However, if you could place something between the support of the Marubozu candle itself and the confirmation of the Marubozu, then we do have the opportunity to get into this for continuation to the upside with protection below that candlestick's low. For more information on that, folks, you just got to go through our Maverick curriculum. However, let's see what ends up happening over the next 10 days. And of course, I knew what was going to happen. That's kind of why I pulled it. But this answers the question on some of the traders that I have that, hey, Joe, I'm worried about chasing a stock. Well, take into consideration the psychology of a Marubozu candlestick. Once it opened, everybody decided to buy it. Now, they came off of the high, but nobody went below where it opened. It just went straight up and stayed straight up for that whole time period, in this case, the daily candlestick. Now, when it comes to the 10-day outlook or the 10-day performance, you can see definitely exceeded it. This is its start. This is where it finished. A pretty good move to the upside. Remember now, Bulkowski, he was taking these into consideration basically no matter where they lied. Downtrend, uptrend, sideways trend. Every time he saw one, he waited for it 10 days past it and he would give it a rating. Now, the majority of the time he found a loss of almost 5%. But where we place this really has a lot to do with the probabilities and the outcome to the upside. There's still a 56% chance, even according to Bulkowski, that it does move higher. So we want to take advantage of that percentage chance and put it in the best possible situation. Uptrending, breakouts, things of that nature. Let's take a look at another example. I wanted to put this kind of the situation that I use the Marubozu for, the Bullish Marubozu, which is uptrending either for a corrective action or some sort of a base or high base breakout. But it really depends on where you put this when it comes to context. So I figured this last example would be something a little bit more specific to what we like to do here at Maverick, or what I like to look at personally. So here we are in a nice uptrending chart, and I'm looking for corrective action. And this has come pretty aggressive. But it is at a support level. I'll draw that here in a minute once I see this Marubozu. But this actually came back up to a resistance level, and this is something that a lot of people just overlook, which is completely fine. But what I like about using what Bulkowski has found with his percentages is a combination of a few things. So number one, we have an uptrend here, an up channel, I should say. Sorry, folks, it's a little rusty. A pullback to a support level. It comes up higher, and this is a Marubozu on close. It happens to be right at a resistance level, so we've got ourselves a little bit of a push to the upside. Now, a Marubozu candle the bullish and the bearish Marubozu, which we'll talk about next time, is a momentum continuation. So the probabilities of continuation are high with this type of pattern. Now we still need the confirmation to get above the candle's high. So let's find out what goes on over the next 10 days just to give it the full Bulkowski, its full chance. So after 10 days, you can see this one's a little bit, better. It definitely finished at the higher part of the range. And based on just the candle itself, yeah, he would chalk this up to a winner. It was it's a bullish candlestick that actually moved higher and closed higher after 10 days than where it started. Yeah, was it a 4% move, 5% move? Probably not. However, if we take into consideration the percentages of this candlestick pattern in an uptrend and extend that with a potential target using Fibonacci extensions, Bollinger Bands, so on and so forth, yes, we can actually identify these upper areas. Now, you guys have been watching me with the progression of these charts, or excuse me, these candlestick setups. I'm taking that, using the advantage of it when it comes to, I'm shooting at the 56% of the time that these actually move higher, the bullish Marubozu. So I'm trying to build a hybrid. And I hope you guys have been picking that up with this candlestick series. So the pattern frequency is 27. These are common. Now, when you take a look at the full Marubozu candlestick that has no higher wick and no lower wick, it's basically, it opens at the bottom and closes at the top. I didn't find them as frequently, I believe, as Bulkowski did, but pattern is continuation 56% of the time, which means if it is a bullish candlestick, it can continue higher. The tested performance rank is low at 71 out of 103. This means that even though it does continue 56% of the time, it rarely stays there over a 10-day period. As a standalone candle, this one is not one of my favorites, but in combination of an uptrend or a 2 or 3 candlestick pattern, it just adds to the probability of continuation to the upside. All right, guys, we are getting a little bit more complex as we progress through these candlesticks. Thanks for joining me, and we'll talk to you next time.